What is going on, everyone? Welcome back to the channel. Welcome back to yet another video. Today is Sunday. You know what that means. We've got Chris on here today. And today is a special day because I am going to be announcing the winner of 1 million Safemoon tokens. If you're a subscriber of this channel, then you should already know about that, but that's going to be towards the end, so make sure you guys stick around. You know, we've got Chris here, of course, because every Sunday we have our little talk show, and we talk about things related to investing, stocks, cryptos even. Whatever you guys want to talk about, this is your chance. Let us know in the comments below, and maybe we'll talk about it next Sunday. But we're about to get started with this week's video. You're not going to want to miss this, so stick around because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. Dow just posted its fourth negative week in the last 5 weeks. NASDAQ gained 0.31% last week, snapping a 4-week losing streak. Then we see that the S&P 500 posted its second negative week in a row, and is set to pretty much open slightly lower tomorrow. Bitcoin selling off. It's getting pretty bad, pretty nasty if you ask me. But what do you make of all of this? Well, that's what we're going to be talking about today. And then we've got a couple of other surprise topics for you guys. But I think what we're going to start with today is we're going to talk about inflation. We're going to talk about what Cathie Wood said about deflation. We're going to talk about those tapering fears. Can you recall the taper tantrum of 2013? Do you think we're going to see something like that again? Let me know in the comments below. But you know what? I brought Chris on here for the purpose of going into this pretty deep. If you saw my last video, I kind of went into the inflation fears. We did talk a little bit about deflation as well. But now that I have a market expert here, I think he can do a much better job than I could explaining this and breaking it down in maybe layman's terms for you guys. So, Chris, you want to take over that for me?
Yes, sir. How are you doing, Ticker family? It's good to be back with you today. So as far as like you want to start with the inflation, the deflation, or where do you want to jump right in at, Pat?
Let's start with the inflation and kind of let them know what that means, how that comes about.
Well, I can break it down for a fifth grader, and that's how you really know you understand something.
Some of these guys are fifth graders.
Yeah, if a fifth grader can understand your explanation, then you really understand the material. So this is the deal. People are afraid of inflation. You have an infusion of money, and we'll talk about tapering later, right?
Yes, we will.
Okay, well, one step at a time. Okay, let me refocus. Okay, so everything, the federal government is in charge, and you have to pick a strategy. You can either deal with inflation, unemployment, but not both. And you have to use one against the other. So the United States, and you have international subscribers?
I do, actually.
Okay, so hello, international community, but as far as the United States is concerned, the Federal Reserve, Fed Chief, Fed Committee is tasked with, we're going to control inflation at all costs. We will preserve buying power. So with that being said, they will do whatever it takes. If that means tapering the bond market, if that means, letting the market cool off, they will do whatever they have to do to control this inflation. So think of it like this. Think about, dollars. So you have dollars and you have goods. And you really want to keep those in equilibrium. You with me so far, Pat?
I am.
Okay.
Sure am.
So when one of those get out of balance, the Fed has to act, or the government will act with fiscal policy, monetary policy. And we were supposed to do a video on that.
We were.
We are so far behind. But what they would do is they would try to control inflation. And they want to keep it around 2% because, as we'll see later in deflation, I think that's next topic that we'll discuss. We'll figure out why that's important. But the Fed is want to keep it around 2%. When you have these dollars, Pat, and you have goods and you have dollars, and when an economy goes down, when COVID hit, then you had the dollars outweigh the goods. Nobody was at work, but everybody was at home getting a stimulus check.
Right.
So now you have more dollars in the economy than goods. Everybody is slow to get back to work. We see this in the chip factory. Are we going to cover Neo?
Yeah.
Okay, one step at a time. I'll get back on the chip. Let's not talk about the chip shortage, but let's just talk about the shortage in the macro environment. You have a goods shortage. So until the employment, gets back up or low or higher or wherever it is right now, they want to control the inflation with the amount of dollars. So if you have more dollars than goods, then the price will go up. Because if, everybody's vying for a limited supply, it's just supply and demand is out of imbalance. So that's what the deal is. That's what everybody's afraid of. This administration is spending money like, you guys in the U.S. know. Every week, every month is talking about stimulus. I think we have a new child, care package coming out every month now. So with all these dollars in the economy, you have to cool it off, because if it overheats, you got inflation. And that's the number one thing. It dates back. We'll have to do a show on that, back to the Carter administration with the oil embargo. So, and this is the 70s, some 40 years ago, but it's so many shows we need to talk about with the Ticker family. But you can go back and look if you have time. So the Fed had to make a decision and say, you know what? We're going to control inflation at all costs. And if that means someone's not getting a job, then so be it. They want to keep unemployment around 6 or 7%, keep inflation at 2%.
So I'm going to tell you a little bit about what Cathie Wood said. I'm not sure if you follow anything she says or not, but she's saying that, we're about to see some major deflation. Companies or businesses are behind the consumer on this, which I believe I agree with. They're kind of dragging their feet, is how she put it, and getting just more and more behind. And so what she's saying that is going on right now is, in order for them to try to keep up with competition, they had to place double and triple orders, and at these inflated prices. So now we're fixing to see a bunch of canceling of all of these orders, which is going to cause a major deflation. Now she's saying that this happened with lumber just last week. It dropped or corrected by 30% already. And she's saying that she sees all of these commodities, she thinks they're all going to kind of go through a cycle of being deflated like that. What are your thoughts on that? And can you kind of hit up deflation a little bit more?
Well, she's right in theory, but actually in practice, you see that a lot in the market with, investors. But the commodities market was not made for conventional investors like you and I, equity investors. The commodity market was to balance, cash flow streams and budgets, because you don't have any control. You have demand. And whether it's elastic or inelastic, you have demand. And we can go back, to a movie made in the 80s. If you have an orchard of trees and you go and plant 1 million acres, you need to have a buyer before you do that.
Yeah, true.
We run into this with NVIS, where you went and invested $50 million into a LiDAR and forgot to get a market for it. So these commodity guys was like, hey, before I plant, I need to find a buyer. And when they find a buyer, they say, okay, well, I need to buy 50,000 oranges, but I can't afford them if a frost happened or a flood or inclement weather. Let me buy 3,000 oranges from you next year for 5 cents an orange. So these two sides, arm's length transaction, they agree and they do it, and they both walk away happy. What Cathie Woods is talking about is people leaving the equities market afraid of inflation, and they want a safe haven. We see this all the time with timber, oil, gas, whatever, is over in the Chicago Board of Trade. And these are equity investors getting in there, making a run of things. These are not home builders. Home builders get into lumber contracts, swaps, and trades and futures contract. Not everyday equity investors that ran from Ford or Procter & Gamble or Apple stocks, and they just ran over there because they're afraid of inflation. And that's the people she's talking about are having an effect and impact on this market. And you have people like Home Depot and Lowe's caught in the crossfire.
Right.
So that's what she's talking about. These people have no intentions on lumber. They're just afraid of inflation. They really don't understand how the economy works. But hey, like I say all the time, Pat, the market's open to everybody. They'll sell you a contract.
True.
But it was not created in the Chicago Board of Trade Commodities. Although I do not, deal with commodities, I do understand them. I know how they work, and they are by far the largest, the traded securities, so to speak. I'm using air quotes, in the world today, because it's not that people look for risk, it's they don't want risk, so they go and find. Can you imagine going out and you had 1,000 acres to plow, to plant corn, and you doing that blindly and you didn't have a buyer? You wouldn't do it.
I wouldn't. No.
So you have to have a Chicago Board of Trade type go-between to say, go in a contract with them and say, hey, I'm going to go ahead and hire 80,000 people to plant my fields, but you won't do it unless you have a buyer.
So another thing that I wanted you to touch on today, Chris, was tapering. So historically, tapering is a sensitive topic for investors, and the last time that we've had to deal with tapering was back in 2013 under Fed Ben Bernanke. If I'm pronouncing that right, I really don't know, but basically he suggested a reduction in bond purchases, and this sent panic basically into the global bond markets and sent the 10-year rising around 1.4% in a span of just 4 months. I mean, it was pretty bad. I know that Powell doesn't want, anything like this to happen now. What are your thoughts on tapering? What are your thoughts on, how soon do you think we're going to see tapering? Because right now they're spending about $120 billion per month on bonds. What do you make of all that?
Ben Bernanke, actually, just a quick story about that guy. They call him Helicopter Ben. He's from the same economic school of thought that I, come from. But he was actually the author of the Economics of Money and Banking when I was in college. Did you know that?
No. Did you read his book?
He wrote the textbook. He was a.
Oh my God! So you actually studied this dude's work?
I studied out of a book. I still own that book. It's almost 20 years old now. But when he was at Princeton, him and some colleagues wrote a book on the economics of money and banking, and he is the author of the book. So I use his book. But to get into his, quantitative easing, so to speak, is we talked about this just a couple of minutes ago with the Fed is out to control inflation, and whether that means buying bonds or not buying bonds, they will do whatever they have to do based on the economic data. So what this does is it shakes a lot of investors because they're thinking they're flying high on the cotton, but in reality it's helping them because yes, you are making, what seems like money, but it's almost like this, Pat. It's like your rent. Let's say your rent, for the sake of ones and zeros, your rent's $100 a month. Mm-hmm. And you're making all of this money and you get $100 raise a month on your job, but your rent goes up $75. So how much really was your raise? And that's what the Fed is concerned about. They don't care about that. They want the stock market to do well. They want economic prosperity and all that, but they want to control inflation. They don't want your rent to go up.
Right.
So they are controlling prices, the CPI, and different data they give them. And if they have to ease, they will ease. So, hey, it's a necessary evil, but it's for our own good.
I mean, I don't have anything against it. I mean, I know a lot of people are just, complaining about it or scared of it because it makes the market or stocks come down. And, I understand that. But this is why we invest for the long term and kind of keep up with all this stuff. But investing in the long term, this is actually a good thing, right? I mean, wouldn't you say?
I mean, if you're long, this is no big deal. If you're short, you got problems. And you need to be on top of it. I don't have time in my life to keep up with every detail on the market. And that's why I'm not a short guy. Yeah, I've got some Dogecoin and some different speculative stuff. But I don't really follow that. I mean, it'll do what it does, and I just kind of forget about it. But if you're short, if you're a day trader, then, you've got some problems. You got a lot of work to do, and you got a lot of sweat equity to put in. But I by nature, I'm a long guy. The market is a long guy, and that's how I deal with it. And these bumps and bruises, they come along. And all of this stuff going on in the market now, these are good dips. I did a video on Fubo about what's a good dip and what's a bad dip. And if you look around your neighborhood and everybody's house is underwater, it's okay. Now, if you look at your neighborhood and your house is the only one flooded out, Pat, you might need to go check your plumbing, your foundation, because you're in a money pit. But if you look around, you come outside and your yard's underwater, but every other house in the neighborhood's underwater, it's okay. It's no big deal. But if you come out and you sink in your front yard and your neighbor's not, you might need to dig that yard up, Pat. You got a busted pipe somewhere.
I hope that it never happens to me, but if it does,
and that's how you got to look at this. So many people, and it's just a big irritant. A lot of people on my channel over at Spot Analysis will tell you, man, I get so irritated with all of these YouTubers who just get away with telling you where a stock's gonna go.
This is exactly what I wanted you to talk about. Let's go.
Okay, let's get into it. What's our next topic?
No, this is it. Well, I wanted you to talk about some of these YouTubers that put out, well, in their thumbnails, and in some of their defenses, some of them they're just using it as clickbait, but others, they'll put ridiculous price targets on stocks that will probably never trade that high, or at least I don't think that they will. Even, just some quick examples, and this example, the first one I'm going to use, is actually not a stock that will never trade this high, but just not anytime soon, is NEO. People were talking about NEO to 100, in all their thumbnails and videos, and you came out with like a, 30, at the time, like a $34, $35 price target, or am I wrong?
I think it was 46, 44, 46, something like that. And that was the initial price target. And I think 2 months ago, I did a video and said, hey, it's not our fault. It's macro. It's systematic. They won't make it to 100. There's only one way this stocks makes it to 100, and that's if you guys take it there.
Mm-hmm.
But all of these guys, and I won't call any names out because I'm subscribed to a lot of these guys. I like to be entertained like the next
Aaron, guy. Michael, just kidding.
Yeah, I'm subscribed to these guys too. I support their channels, but I just feel like if you go and tell somebody it's going to the moon, you can go right now to my channel and click on it. Not that conspiracy stuff, and we'll talk about that later. But and I tell you it's a conspiracy. But anything else, you back it up with your train of thought. It's going to be wrong. By nature, it's an estimate. But at least tell me how you got here. It's like, okay, Neo's going to 100 because JFK is going to get reincarnated. That'll work. But tell me something.
Right, yeah.
And I get so many people. I feel like a psychiatrist on my page because I get so many people with these high averages that come over because it's not sexy being a fundamentalist. Mm-hmm. I've been a fundamentalist for like 3 months. I got 300 subs. I could easily go in line and have 10,000 subs. It's not sexy. Nobody wants a fundamentalist until you stuck listening to these guys pump these stocks, and then you got a high average. I had a guy on my page in my email asking me when's it going to 100 because I bought all these shares, and I'm like, dude, you should have subscribed to me. I got like 15 videos on NEO. But it's not sexy, and I won't change who I am, and if that means I stay small, so be it. But I am diehard fundamentalist. That's the only way I'll go. And if you're going to be a day trader or a technical analyst, make sure that's your only job. You can't be out here driving trucks for Coca-Cola in the daytime and then try to get home at night and make moves. You'll go flat broke. If you're a day trader or you're a technical analysis professional, you have to have the computer on at all times ready to make moves or you're going to die. But fundamentalists, long people like me, you, a lot of your listeners, we can go on vacation. It's no deal. That's what Buffett says. Invest at a stock that if you go to sleep and wake up in 5 years, you're still good.
Or one that an idiot can run.
Yeah, I know. Yeah, invest in a company an idiot can run because one day an idiot will. And that's all. That's just the big irritant. And I feel bad because this is real money we're dealing with, Pat. This not fake dollars. Like, people put a lot of money in this.
Yeah.
And they're serious. And I'm like, I don't know what to tell them, but you can't come to me second. You got to get to me first. And like I tell them on my page, you may not like me. You may not like something about me. You may not have a take. But if you don't like me and you don't subscribe, you need to find somebody in your subscription page that know what they're talking about. You can have. I got people in my page. I'm subscribed to 9 people. I tell you right now, I won't say their names. They don't know what the hell they're talking about, but they so entertaining. I want to be entertained. I don't listen. I don't make the moves, but I love how they present the content. I love the setups, and I just admire them. But they don't know a damn thing about finance. So, if you are like me and you really like the entertainment part of it, it's fine. It's all fun and games. But you need to find you somebody who knows what they're doing.
That sounds like some really, really good advice, Chris, because a lot of people aren't doing that. And I think that they're really paying for it. You know, some of them are just now realizing it, you know, when the market gets ugly. They really pay for it. But anyhow, we don't have much time left here, so I'm going to hit on something else real quick. I wanted to talk a little bit about Ray Dalio and what Dalio's been talking about. He says that within the next 5 years, foreigners that have been lending money to the U.S. will no longer want to do so. And the reason for that, as he describes it, is because of massive debt, which is going to create less opportunity for Americans and also create a lack of trust in the US dollar. So that's going to cause a lower standard of living for a lot of Americans. He said that the only way to really fix this is for the US to make some systemic repairs very quickly. You know, they basically need to change how capitalism works in this country. And what he says about capitalism, Chris, is that, you know, with capitalism, you know, they do create more wealth, but they don't distribute it very well. And this brings in, you know, even more concerns. He's even hinting that there may be a new superpower, saying that China is getting a lot stronger and might overtake our economy. What are your thoughts on that, Chris?
I think that they will at some point if things continue. But as far as what Ray was saying, when you talk about economics and financial economic theory in particular, you have 2 spectrums. You have reality and you have theory. And what he is talking about is true in theory, but not so in reality. Now, I always give this example to people when I talk to them one-on-one. The John Maynard Keynes, you know, great economist from Europe, one I studied, admired, and read a lot of his literature. But what he always teaches us is that, you know, the economy is downward sticky. So what would happen, Pat, if you had, you know, you're a father, you're a single father.
Yes, sir.
And you have $100 and you knew that was your last $100. How long would you hold on to it?
Well, for a long time.
Because this economy needs to create velocity.
Right.
So what John Maynard Keynes would say is he's telling all of these people, and we actually saw in the U.S. in the Great Depression, a United States president get unseated for FDR who thought differently. But to go back to this example, the government has to come in and let you know it's okay to get the economy back going. And they do this, and it may cost a little debt, but the alternative is worse. Right. And this debt thing has been going on, you know, they can add one more thing to that paradigm, death and taxes. They can add death and taxes. Yeah. So it can be a problem, but it's a necessary evil, because if you don't come out and get the economy going, you're not going to be able to service the debt anyway. And you can't sit back and say when it's all over, did we exhaust every avenue? Because they have to exhaust every avenue. We have to do what we got to do to get these tax revenues going. So if we have to subsidize some things to keep the economy going, at all costs, it has to move. And like we said earlier, it has to keep inflation in check, and we have to move this economy. And sometimes they take a little debt, but when it's all said and done, it is backed by the U.S. government. And my reply to what Ray said about in 4 or 5 years is kind of like, you know, who they going to buy debt from? Don't you know in the banking crisis in 2008, the U.S. was having negative interest rates? So people was actually paying the U.S. to keep their money. That's how far ahead the U.S. economy is in the world. Now, as far as China goes, I wouldn't recommend. I mean, you have a lot of people in the EV market, NIO and XPeng and all these guys, but they're invested in those companies here.
Right, yeah.
Not over there.
Right, exactly.
And you have a different, you know, Russia and communism. Yeah, they may be invested in Chinese companies, but they invested over here in them. Yeah. So when you have countries like the Netherlands or Norway or Europe and they want to invest internationally, where would you put your money? In a communist regime or a capitalist regime? Now, it has some flaws. It has some issues with it. and they do need to distribute it more. And we can talk about that in the next paragraph. But it's a necessary evil that's not going anywhere because the alternative is worse. And you can just ask Herbert Hoover how that worked out.
All right, so now it's time for me to announce the winner of the 1 million Safemoon token giveaway. That would be Drew Bryant. Here's his comments. The criteria here was that you guys liked the video, became a subscriber, and left a comment. You won the 1 million Safemoon tokens, buddy. Congrats. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.